Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. This man, Dimitri Pargamanik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And with that, let me share my screen. And while I'm doing that, if anyone is joining us for the first time, Will and I, we do this show in the morning to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, you can put that into the live chat on YouTube. Will's watching it. He'll read them back to me. If you want to come on a show and ask your question live, we also provide a link to Zoom. So click on that link. When you log into Zoom, click on raise your hand. We'll let you in. You could ask your question directly. While we're waiting for more people to join us and to give you guys a chance to put in your questions, we'll start out taking a look at the pre-market report to see if we could get some insights on what's trading in the pre-market hours, and then we'll move on to the questions. So let's start with the pre-market report. These are stocks trading in pre-market hours. I'm going to come down here and we see we have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. I see 20 stocks so far made our percentage gainers list, 34 on our decliners list. So from this perspective, right now, it looks like we're setting up with a bearish sentiment, bearish bias in the morning. Let's take a look at it from another perspective. I'm going to climb up here, and we have this calendar view, which shows us summary stats of what's going on in the pre-market hours from a high level. So today is September 13th. We see so far there are 321 stocks trading in the pre-market hours higher than previous day's close, 325 trading lower. If we looked at the volume, we got 141 million shares trading higher versus 70 million lower. And if we take the dollar value of those shares, we got $1.5 billion worth of stock trading higher, $2.8 billion worth of stock trading lower. So a little bit of a mixed bag there, but I would say slightly more bearish bias right now in pre-market trading. Okay. And I think we did get a CPI number come out. Is that correct, Will?
That
looks like, still elevated. They're saying, oil prices contributed to that. I think oil prices were what now, $90, close to $90 a barrel, right? And we're in the 70s, I forget what it was, like mid 70s, like a month ago. Let's come down here, take a look at it from one more perspective. When we looked at this list for the pre-market symbols, we see there are stocks in there that are low cap stocks. We have ETFs in there, leverage products. So this list really contains any security that's listed on a major U.S. exchange. If it's trading in pre-market hours, it meets our thresholds that we set to make this list based on volume, traded, liquidity, price move. It could make this list. And to narrow it down to a small group of stocks, you could use the filters above. All right. And if you have a watch list, you could filter by your watch list. We're going to use this one in ETF. Click on that. You get a drop down menu to choose from different ETFs. The first one, SPY, that's the S&P 500 ETF. This one over here. We're going to click on that. When we do that, the list below gets filtered by stocks that are holdings in the SPY ETF. So here we see 4 stocks which are the S&P 500 constituents. Here we see 4 stocks are trading higher in the morning, 5 lower. Again, it's kind of a mixed bag there. So far pre-market trading, we don't see very large sentiment one way or the other. Probably so far, I would say a little bit towards the bearish side. So we gave it a couple minutes, Will. If you have questions, I'll take some questions now.
Nothing's popping in yet, D.
Okay. So let's move to SPY. I'll just start maybe taking a look at some of the tools. I'll demo them, and based on some questions that I've been getting through the emails, if you guys have questions, though, let me know. Let's start in SPY. I'm going to go to the options chain, and this one we'll take a look at 0 DTE options. Okay, so here on the options chain, the first expiration that pops up, this is yesterday. We're not open yet today, so this is yesterday's closing prices on the options chain. And the 0 DTE options are options that expire at the end of today, right? They only have the 1 day to go, or not even 1 day, right? They expire at the end of the day. And you could see they are popular. Yesterday, these are the volumes for the different expirations. So 3.3 million contracts traded on the September 12th, which is the highest traded expiration. And I'm going to go back, just to go back in time. We could pull up a different options chain. We have these snapshots, and let's go back, let's say till noon, right? And see if we could analyze the options from noon, right? Pretending, what if it's 12 o'clock right now? And we're looking at the options chain, right? So now we're pretending we're yesterday, 12 o'clock, right at noon. And this is the options chain we're looking at. So we see, here we go, 12 p.m., stocks 447.06. And these are the options in the 0 DTEs. So the 447, that's over here, right? That's the at the money strike. And let's take a look at the straddle. How's the straddle priced? We're going to compare the market prices to our theoretical price. What do we think it should be priced around? Okay. And are they overvalued, undervalued? Is it a good deal? Let's just take a look at that. And we're looking at this snapshot this is the first time we're looking at it. So let's take the straddle that's buying the call, right, and buying the put. So you can see here, 447. If you're buying a call, these are the two legs. Buying the September 447 call for 61 cents. And then the next leg is buying the 447 put, right? September 12th for 55 cents. And let's calculate that and see how that straddle looks like. So you could see here, the combination of that straddle is $1.16, right? So you see here, this is what it would look like, once the options expired. So based wherever the stock price is, this is your P&L. So then the question is, well, how is $1.16? Is that a good price? Is that a bad price? Like, what do I do here? If I don't know, if I'm not sure, I kind of need a benchmark, right? I need some kind of a benchmark to know, is this below or above my benchmark, and by how much? Maybe, if I set it up as a buy, is this a good deal? And if I'm overpaying, by how much am I overpaying? And can I justify it? So without knowing anything, we could start taking a look at the data and saying, well, what does this stock usually do? right? It's 12 o'clock. So we know we got 4 hours to go. We got 4 hours to trade between 12 and 4. So we can't include the volatility from 9:30 to 10 anymore, or from 10 to 11. That's done, right? We're right at noon. So we're right dead, right at lunchtime where it's slow. It might be slow between 12 and 1 and 2. We don't know, right? But we know that half the day is already done. So now we got to analyze from noon till 4 o'clock. So let's start that. I'm going to go here to the distribution Theo. And now I have to set this up. So I need a theoretical value, right? So right now this is set to the last snapshot, which was 3:55 p.m. But let's set this till 12 o'clock. So I'm going to go here. I'm going to set this till 12 noon. Okay. And I'm going to run that. And what it's going to do is bring me back stats. How does the stock usually perform from 12 o'clock to 4 o'clock, right? So that's the time interval that we're looking at. From 12 o'clock to 4 o'clock, how does the stock perform? And based on that, what would this straddle be worth on average, right? So if, whatever percent it moves from 12 to 4, if it moved exactly the same percent every day, what would this straddle be worth, or on the average, what would it be worth? So let's reload this. So this is what it's shown us from 12 to 4. If we went back to history, right, and we looked at how does the stock usually perform, from 12 to 4, we could see the percentage moves here, right? These are the percentage moves. So if we took those percentage moves, then we know what these options would be worth at 4 o'clock, because they're going to be either, one's going to be worthless, one's going to be a parity, but we'll know what it's worth. And on average, if we looked at all our history, then this straddle is worth $1.21. So from this perspective, maybe, it looks like the markets are discounting it a little bit, right? More sellers than buyers in markets are discounting it. So they're looking at it that it's going to move, that today's volatility would be less than usual. And then, we have to make a decision there. Well, that's the average. The other question is, well, if we're buying it at 116, how, in all our observations, how many of those observations did the stock move enough to cover the cost of this and still be profitable? All right. So that is what this is, 40.9%. So this is saying 40.9% of our observations down here, so this is for the call, and then this one be for the put, but 40.9% of our observations say that the stock between 12 and 4 moved by a big enough percentage to cover the cost of this current straddle. Okay. So those are the, benchmarks that we're starting to work with, to start formulating our decision-making process. Now, we could also narrow the data down further, right? Because this is one set of data, and based on this one set of data, that we're answering some of the questions that we have. But what if we just wanted to look at the day of the week? So these are 0 DTs, and maybe on, certain days of the week, the stock moves different. I don't know, like maybe, we're looking Monday through Friday, but our Tuesday is a special day where the distribution of the returns looks much different than the rest of the days. It's possible. So that's our next question, right? What if we just looked at data that for the particular day of the week, right? So yesterday was Tuesday. That's what we want to do. So I'm going to select Tuesday. Now I'm going to reload the strategy. And now it's showing up actually that Tuesdays, right? If we took the data for Tuesdays, it looks like on average, the straddle would be worth $1.31 with the win rate slightly higher. So at least from that perspective, we're looking at it from a buy, it looks like a better deal even. So does that mean that if we buy it, that means that we're definitely going to win? No, because these are averages, these are distribution returns. We're going to be there. There are going to be times that you lost, times that you won. The idea is that, if this is the average and the times, it closes above the average, you're a winner. Times it closes below the average, you're a loser. But now the market is slightly discounted, right? So you've got this slight theoretical edge, right, below your benchmark. So that's what it is. It's a slight theoretical edge, because if you're wrong, and let's say the stock completely doesn't move, right, from 12 to 4, yes, you're losing $1.16, right? But it's not $1.31. That means you already bought it at slight discount. So you're losing theoretically less than you would have if you just kept paying the average. But let's take a look at it. And, let's say it was $1.16 in theory. And we're like, you know what? I think today it's going to be a mover. Tomorrow, let's say you form a thesis. I think that the market's going to move because, tomorrow, like today, the CPI numbers coming out, people are going to try to reposition between the CPI number. Some people are going to maybe try to get, maybe we're going to have people trying to front run that number, and we're going to get some volatility. So I think we got a good chance that we're going to be moving, maybe even the last hour. People are going to come in there. So you form this thesis and you're like, I'm willing to take that risk. So now you buy the straddle. Let's see what happens the rest of the day. So so keep in mind, 116 at 12 o'clock, right? But yeah, so this is at 12, right? So I just kind of pick noon as the middle. I'll just call it the middle of the day, because that's really when things just kind of slow down for lunch. So we see here, these are the other snapshots here, and underneath it are the prices of the stock. So really, you needed to move $1.16 at least away from 447 to break even above that. And we could look at it. So look. So did it ever? Even if we didn't wait till 4 o'clock, because if we waited till 4 o'clock, we're at 445.94. So basically, you move $1.06, right? So you probably at that point, at $1.06, you'd have been a loser by 10 cents if you buy it at $1.16, and the put would be in the money by $1.06. The call is worthless. You're down 10 cents. So that would be a loser. But let's just see if we were right about any of the volatility. So we'd have to see at any point, and these are only half-hour snapshots, right? So we're not looking at the snapshots in between there, but I'm just eyeballing it. So from 447, let me see. Here's at one point you would be completely in the money. 448.21, that's correct. So that would be, the call would be at least $1.21 at 130. So we could see here that even in between, there are moments in there where this straddle, right, 445.63, right, from 446. So that's $1.37 if you bought it for 116. So there are moments in there already that it would have been in the money. So here, and this is the question, well, what do you do then? Right now you got this straddle, it's already profitable at 3:30. You have another half hour to go. What do? Let's take a look at that. 3:30. And notice that twice it was already completely in the money, but in opposite directions, right? One time the call was in the money, right? Intrinsic value of $1.21. And now you got the put. Now that's in the money by $1.37. So at 3:30, you're looking at this, not knowing. So here's your put. $1.34, $1.40. This is still 2 cents bid. And what do you do here? Do you take it off? And the problem is you don't know, right? Because you take off the put and then it goes all the way to the end. And then you got a half hour to go. It goes down, the stock goes down more. It could be worth $2, $3, or it could go back up to 447 news. So at this point, you don't know. What you do know is you just have a position on. Right now, you have a position on with a risk, right? So what's happening is, okay, you have a put, 3:30 to go, and is there edge to trade around it? You're short at this point. You're short delta, right? Because you have the put on. Do you sell something? Do you offset it? Here, it's always the hard question, because there's no simple right answer, because at this point, all you do is have risk on, right? There's really no more edge in it from the perspective of selling it, because it's bid below parity, right? So you might be better off at this point, buying the stock instead of selling the put, because if you buy the stock at the end of the day, your stock and your put will offset, because it puts in the money, right? If the stock rallies above 447, then you got to look at free call. And I get these questions, well, what do I do? What do I do? But that's always comes from the trader's perspective of what is your risk, what is your outlook. You get from experience, what else are you looking at? Can you move that money, right? Can you lock it in and move it into a different trade that has more edge, right? And what's the best way to reduce that risk? And this, it comes from experience, knowledge, and everybody has to manage that on their own. There is no right answer at this point, because if we're looking at 3:30 here, we know where the stock is, we know where this option is, right? But without knowing where it's gonna, it's easy right now to look at it, because we know where it ended. But at this point in time, you didn't know. But all you know is that, okay, you have this risk on, and really there's no more edge in the option itself, right? The option itself is ready. It's in the money. It's deep in the money. There's no, you wouldn't, if you were looking at this moment and you didn't have a position, you wouldn't be buying more, right? There's no point in buying this for $1.40, and you wouldn't be selling it either, because you'd be selling it below parity. So there's no edge in trading it either way. All you do is just have this risk on this position, and that's what you have to manage. Do I want to just hold on to this risk till the end of the day? Do I want to, lock it in? And by locking it in, you locked in whatever profit you have, and now you're moving on to a different trade to find different edge. And I think that I get a lot of questions like this. What do you do? And that's the answer is every individual. That's part of trading, right? It's not that mechanical. There are decisions that you have to make on your own, right? There's human touch to trade. There's going to be human touch to trading, even with automated systems that have lots of decision making programmed into their algorithms. There's a human being watching those risks, watching those parameters, evaluating, checking. So there's no black box rule for everything. So hopefully, that helps answer one of the questions, because this is what I get. Well, what do you do when it's in the money? What do you do when this? And we're looking at it right now, right? What would you do if you had no position on? Right? If you had no position on, well, clearly this option is no longer a buy anymore, right? It moved. You don't need to buy for $1.40. You don't want to sell it below parity. I think was that below or right at parity. So then you're faced with, do I reduce my risk? Do I hold on to the risk, and why? Then you have to have a good reason. Or do I just reduce my risk and look for more opportunities? All right, well, if there are no questions, I might just end it here.
We're right up against opening anyways. We're about 4 minutes away. Awesome job, D. For those who didn't catch yesterday's webinar, it was a very good one, and it is available on Interactive Broker's site forever. So I'll put a link to all 29 of the webinars we've done on Interactive Brokers. You can go on and watch them at your convenience. Awesome job, D, as always, my friend.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Trade in peace, chameleons. Everyone have a great day.